haven't spoken to a single person who is considering buying an EV or PHEV for their business or themselves, and they haven't mentioned the confusion around this $7,500 tax credit. Well, the confusion stops now because I'm here to give you all the details that you need to be confident with buying your next EV or PHEV to receive this full tax credit. If you're not familiar with what an EV and PHEV stand for, they stand for electric vehicle and plug-in hybrid electric vehicle respectively. Just know that when I mention a vehicle, I'm referring to either of those. Now, most entrepreneurs or individuals only know that if I buy a vehicle, I get a $7,500 credit towards my purchase or taxes, whichever way you'd like to look at it. Well, I'm here to inform you that you won't always get this full $7,500 credit.
What?
My name is Sierra Stanberry, an accountant and tax strategist, and I help small businesses make smarter decisions today to build lasting wealth tomorrow. And in this video, I will explain what an EV tax credit is, which, by the way, is also known as the Clean Vehicle Tax Credit by the IRS. I'm also going to explain how you can qualify for it, how to calculate it, and give you examples of vehicles that qualify. You will want to stay tuned to the end of this video because I'll be providing a tax strategy that may help you qualify for this tax credit if you discover you don't qualify while watching. Furthermore, I'll provide a way you may get this credit by leasing a vehicle. Let's get into it. The EV tax credit is a credit available to taxpayers who buy qualifying electric or plug-in hybrid vehicles. The qualifications for it were modified for the years 2023 through 2032 as part of the Inflation Reduction Act of 2022. Unfortunately, this modification knocks out many vehicles that used to qualify. Now, we can't provide a negative without a positive, so on a good note, you may now buy a used vehicle and qualify for up to a $4,000 tax credit. Prior to 2023, used vehicles did not qualify for this credit. Only new vehicles qualified. All right, so how can you qualify for this tax credit? We would need to break this down into two parts. To qualify for this tax credit as an individual when buying a new or used vehicle, you must buy it for yourself and not with the intention of reselling it right away. You must also use it primarily in the US. Now, I don't mean to get too personal, but how much money do you make? I am asking because, as you know, the IRS won't be IRSing unless they put an income limit within these qualifications. I'll give you the limitations in a second. In addition to the above, for used vehicles, the taxpayer who bought the vehicle must not be the original owner, be claimed as a dependent on another's tax return, or have claimed this credit in the 3 years preceding this purchase date. Okay, so let's get into the details of the income limits. Your income must be less than the limits set by the IRS. There are different limits depending on whether you buy a new or used vehicle, as well as your filing status. If you buy a new vehicle, your income can't exceed $150,000 if you are filing single or married filing separately, $225,000 if you are filing as head of household, and $300,000 if you are married filing jointly. If you buy a used vehicle, your income can't exceed $75,000 if you are filing single or married filing separately, $112,500 if you are filing as a head of household, and $150,000 if you are married filing jointly. If you exceed any of those limits, you cannot claim this credit unless your income falls below the limits in the previous year. That's correct. You can apply your income from the year you received the vehicle or the year prior, whichever is the lesser of the two and doesn't exceed the limit set forth by the IRS. For example, let's say I took delivery of a brand new Tesla Model 3 in 2023. My filing status is married filing jointly. My husband's and my income totaled $310,000 in 2023. However, in 2022, our income totaled $250,000. Now tell me, would we qualify? We would qualify for this credit because our income in the year prior to the year we took delivery of the vehicle met the $300,000 income limit. So we've determined that either you met or did not meet the individual requirements. Now we must determine if your vehicle qualifies. All EVs and PHEVs do not qualify for this tax credit. Let me say it a little louder for the people in the back. All EVs and PHEVs do not qualify for this tax credit. Now that I've got that out of the way, as mentioned before, most people think, oh, if I just go get this electric vehicle, I'll get this $7,500 tax credit. Well, pump your brakes and don't let anyone tell you that it qualifies for the full amount until they check the qualifications I am about to go over. Again, the qualifications are a tad bit different for buying a new versus a used vehicle. The qualifications for a new vehicle are, obviously, the vehicle must be a hybrid or fully electric and it must be new. Your battery capacity must be at least 7 kilowatt hours. The vehicle's gross weight is less than 14,000 pounds. A qualified manufacturer must create the vehicle. The vehicle must have final assembly in North America. The vehicle must meet critical mineral and battery component requirements as of April 18, 2023. And last but certainly not least, the vehicle must meet the limitations placed on the manufacturer's suggested retail price. The qualifications for a used vehicle are slightly different. The qualifications are: the vehicle must be either fully electric or hybrid with a battery capacity of at least 7 kilowatt hours. It must weigh less than 14,000 pounds. The sale price must be $25,000 or less. It must have a model year at least 2 years earlier than the calendar year of purchase. For instance, if you buy it in 2023, the model year will need to be 2021 or older. Finally, it cannot have been transferred to a qualifying buyer after August 16th of 2022. Now that we've gone over the tax credit qualifications for a vehicle, let's go a little deeper into some of the new vehicle qualifications. Sometimes new to the IRS may mean as long as the vehicle is new to you. This is not the situation here. When the IRS specifies that the vehicle must be new, it has to be brand new. It can't be previously bought, registered, titled, or used for any purpose. So when you go to the car dealership, skip the used inventory and head straight to the newbies. If you are wondering how in the heck you will know if your vehicle has final assembly in North America, you can check by visiting the Department of Energy's website by typing this link into your browser or clicking the link below this video. You will then click on the tab based on the date the vehicle was placed in service or taken delivery of. Now, depending on the tab selected, you will need to either enter the VIN number, review a list of vehicles, or click a link. The battery component and critical mineral requirements apply only to vehicles that took delivery on April 18, 2023 and after, which means if you purchased the vehicle before that date, this qualification does not apply to you. If you purchased it after this date, the credit amount you are able to receive will fluctuate based on this requirement, which we will discuss later in this video. The battery component requirement states that a certain percentage of the vehicle's battery must be assembled or manufactured within North America. The critical mineral requirement states that a percentage of critical minerals, such as graphite, in the vehicle's battery must be gathered or processed in the US or a country with whom the US has a free trade agreement with. So, what about the manufacturer's suggested retail price? You will hear a lot of people refer to this as the MSRP. Let's answer the question. Are taxes and fees included in the MSRP? Nope. The taxes and fees are not included in the MSRP, nor are the cost of extra items added by the dealer. Keep in mind that the MSRP is not always the purchase price, and incentives and trade-ins have no effect on it either. Now, MSRP is subject to pricing limitations. New vehicles that are sport utility vehicles, vans, or pickup trucks cannot exceed $80,000, while all other vehicles such as sedans cannot go above $50,000. Used vehicle MSRPs can't exceed $25,000. So we've covered what the EV tax credit is and how to qualify at the individual level as well as the vehicle level. Now, the question still stands. How do you calculate what credit amount you can take? The calculation depends on the date you took delivery of the vehicle for the 2023 tax year and whether it is a new or used vehicle. Notice that the purchase date does not matter, but the date you received the vehicle does. You can't take credit for something you don't physically have in your hands. I'll start with the calculation for buying a new vehicle and then go into a calculation for a used vehicle. The calculation for a new vehicle is different depending on whether you took delivery of it between January 1st and April 17th, 2023 versus if you took delivery of it on April 18th, 2023 and after. If you took delivery of a new vehicle from January 1st to April 17th, 2023, your base credit amount is $2,500. You would then add on $417 for a vehicle with at least 7 kilowatt hours of battery capacity and $417 for each kilowatt hour of battery capacity beyond the 5 kilowatt hours. If you take delivery of a new vehicle on April 18, 2023 and after, it will have to meet the qualifications mentioned earlier, as well as the new critical mineral and battery component percentages for the respective year. Here's a breakdown of the percentages per year that must be met for the battery component requirement for new vehicles. An example of how you would read this is, in 2023, 50% of your new EV or PHEV battery must be assembled or manufactured in North America. Here's a breakdown of the percentages per year that must be met for the critical mineral requirement for new vehicles. An example of how you will read this is, in 2023, 40% of your EV or PHEV batteries' critical minerals must be gathered or processed in the U.S. or somewhere where the U.S. has a free trade agreement. Did you notice the percentage qualifications go up each year for both requirements? So what does this mean for you? The sooner you buy your vehicle, the better your chances are of qualifying for this full tax credit. Unless these vehicle manufacturers start changing the way they produce their electric vehicles, fewer and fewer vehicles are going to qualify for this tax credit in the future. If you meet the new vehicle requirements mentioned earlier and meet both the battery component and the critical mineral requirement, you will qualify for a $7,500 credit, which is the max. Now, let's go over how to calculate the tax credit for a used vehicle. This is a lot simpler than the calculation for a new one. You would simply take 30% of the sales price. That's it. The maximum amount of the credit is $4,000. All right, I am certain that you either came here with an EV or PHEV in mind to buy, or is wondering which ones qualify for this tax credit. Some EVs or PHEVs that qualify are Tesla Model 3, Tesla Model X Long Range, Tesla Model Y, Rivian R1S and R1T, BMW xDrive 50e, Mustang Mach-E, Cadillac Lyriq, and Jeep Wrangler PHEV. There are other vehicles out there that may qualify. I just wanted to give you a few for the sake of this video. And based on my research, you can't go wrong with the Tesla because you can take full credit for most of them. Oh my gosh, what time is it? You know what time it is. Recap time. So we've gone over what an EV tax credit is, the qualifications that must be met at the individual and vehicle levels, how to calculate the credit amount you qualify for, and some examples of qualified vehicles. Now, what if you didn't qualify for this credit because your income was a tad bit over the income limits, or you wanted to lease the vehicle instead? One tax strategy to bump your income below the limits is to max out on your 401k retirement plan or contribute to a healthcare savings account, better known as an HSA. Now, this will work majority of the time only if your income is right above the limit. If you wanted to lease the vehicle, you could indirectly receive the tax credit. What do I mean by indirectly? Well, someone is getting the tax credit even though it's not you. That someone is the car dealership. There's something called a commercial clean vehicle credit, which is given to businesses such as car dealerships. You can check to see if they pass any of the tax credits to you. If so, it will give you a lower monthly lease payment. In addition, you might use the fact that they are getting a tax credit as leverage when or if you negotiate your lease payment. If you know, which I know you do because I just taught you this, that they received a tax credit, you know they paid far less than you will because they're in the business to make a profit and not go broke, might I add. So why not negotiate? Listen, y'all, if my husband hasn't taught me anything else in life, he's taught me that asking questions has never hurt anybody. This man would negotiate something for free if he could. He isn't afraid to ask any questions, which is partly why I think he's a successful entrepreneur. All right, enough about him. I hope this video has helped you understand this credit and given you the confidence that you need to utilize it. If not, please do not hesitate to leave your questions in the comment section below. I can't close this video without giving you some more facts that may help answer additional questions. Fact number 1. You can't take this credit with leased vehicles. However, as mentioned before, you can check with the dealership to see if the savings from the tax credits are passed down to you. Fact number 2, you can only claim 1 credit per vehicle. Fact number 3, this credit is non-refundable, which means you will not be able to claim a refund. It only reduces the amount of taxes you owe. For example, if you owe $1,000 in taxes, you can only claim $1,000 in tax credit. Fact number 4, you can't carry the unused portion of the credit forward to the next tax year. Use it or lose it. Fact number 5, used vehicles bought before 2023 do not qualify for this credit. Fact number 6, you can locate your vehicle's weight, battery capacity, final assembly location, and bin on its window sticker. And last but not so factual, number 7. Yes, you heard it right. The statement I am about to make is not so factual because this isn't official yet. But in 2024, taxpayers may be able to take this credit at the dealership. You won't have to wait to claim it on your taxes. Now, the IRS moves at their own pace, but they are expected to give more guidance on this in the coming month. All right, guys and gals, it's been good. It's been great. As always, like, comment, and subscribe so that I know these videos are helpful. My name is Sierra Stanberry, and I'll see you in the next video. Take care.